Welcome back, folks. Hope you're having a good morning so far. The Asian markets are definitely not. The Nikkei market actually has resumed trading after a holiday yesterday, and it's down almost 2%. The Japanese market, that is. Most global markets have been under a bit of pressure, but our own markets have lots to deal with in terms of earnings. So let's get straight to that. Our research team is standing by with a list of top 10 stocks. TCS is top of mind, of course. Rima is joining in. Rima, good set of numbers?
Absolutely. This is a good set of earnings, broad-based, and this should allay street concerns about near-term weakness, which would have shown up in Q2. So constant currency revenue growth at 4% surpasses expectations, and it's also an improvement compared to Q1 levels. Margin expansion at 90 basis points is ahead of street expectation. Deal wins are steady on a quarter-on-quarter basis, and even the troubled geographies of UK and continental Europe, which the street was worried about, has clocked in nearly a 15% year-on-year revenue growth. The management commentary, Q4 margin guidance of 25% stays intact. They believe attrition has peaked out. And even the commentary on the demand environment deal pipeline has largely remained intact. So even as the macros remain volatile, there hasn't been a business impact as of now. That said, we do not have any visibility from the management about next year, FY24, on revenues or margins. The only concern in the numbers was the net hiring. The net hiring has dropped off considerably to 9,840, which compares with 14,000 in the prior quarter and an average of 25,000 in FY22. And even the attrition, though it's peaked out, has risen in this current quarter to 21.5%. But all in all, it's a good quarter, surpassing expectation and fairly broad-based. Back to you.
Okay, all right, Rima, thanks for that. Remember, you can catch the top team live on Bazaar at around 8:25 a.m. today. Well, Rima, coming back to you though, Infosys, it had given us a bit of a heads up yesterday. I think Nimesh as well was working the phone lines. Well, late last night, they have said they're going to be considering a buyback as well. Stock opens in the green. Give us more details.
Yes, so Infosys has said that on Thursday, when the board meets to consider earnings, that's results, they will also consider a buyback. This is something that the street was anticipating. For one, the cool-off period ended in September, which means the company was eligible to do a buyback. And the second compelling reason is that if the company wants to meet its stated capital return policy, the plan, the company needs to do a buyback. The company's capital allocation policy is to return 85% of its free cash flow over FY20 to FY24. But up until now, they've managed to return only 73%, which means it needs to pick up on this, return via dividends as well as buyback. So that's the compelling reason why the street was anticipating that perhaps this time the company could do a buyback. They've done 3 buybacks in the past. The last 2 buybacks were in the range of 9,200 and 8,260. But as I said, one of the brokerages also pointed out, since the company needs to get to its capital allocation policy of 85%, maybe this time the buyback amount could be higher. The last 2 buybacks were open market buybacks. It took about 5 months to complete. Going by that trend, maybe this time it could be an open market buyback too. Back to you.
All right, Rima, thanks a lot for that. So that's on Infosys, but let's move on from IT and talk about India Cements, where one of its subsidiaries has been acquired by JSW Cement. I think you folks were talking about this yesterday on Closing Bell as well.
Well, that's right. Nimesh gave a heads up that, in fact, this is likely to happen. And this is good news, actually, from an India Cements shareholder perspective. Remember, our sister channel, CNBC Hours as well, has said, a couple of weeks ago that this is likely to happen. That's the block, the limestone block that they have currently sold. And the other one is the Rajasthan cement unit as well could get sold. So what's come yesterday is that JSW Cement, they have acquired Springway Mining Private Limited for around 477 crores. They'll receive most of it now, and close to around 100 crores they'll receive towards the end of this calendar year. What do they own? They own that limestone block in the Panna district in Madhya Pradesh. And as per Motilal Oswal, they said they've spoken to the management and they'll receive another 127 crores odd. That's because that was the advance that was given from India Cements to this particular unit. So the total consideration will be around 600 crores. Going by that, the impact is they had a debt of close to around 3,100 crores. If they use it to reduce debt, it comes up by close to 20% positive. The promoter intent as well is positive because, this was a block. Now they're clearing up their balance sheet. The street will like that as well. And we'll wait for clarity on that Rajasthan unit, which our sister channel CNBC Hours had said that they could possibly looking to sell that as well. So that will be the next trigger, but the stock opens well in the green. That's about India Cements, where Vivek is joining us to tell us about the stocks and news. Vivek.
Well, good morning. Some interesting developments across the infra space, and we are looking at the IRB twins. So IRB Infra yesterday came out with an update as far as the September toll collections were concerned. The company managed to collect close to 330 crore, which is uptick of almost 36% on a year-on-year basis. However, on a month-on-month basis, it has fallen down by around 2.5%. IRB Invit, on the other hand, has seen again an uptick of close to 40% on a year-on-year basis in terms of its toll collections, coming in at close to 73 crore. And when you're talking about these numbers, while optically they look much higher on a year-on-year basis, it's important to note that last year in September 2021, toll collections were suspended on the back of the farmers' agitation protest. Also keep on your radar Reliance Infra. Now remember, the Delhi Metro was supposed to make a payment of almost close to 4,500 crore to the company as part of the arbitral award. However, it did not make this particular payment by October 4th, which was the due date. However, the Delhi High Court has allowed time till the end of this particular month to come up with a repayment plan. Lastly, keep an eye out for Adani Port, largely along expected lines. NCLT Ahmedabad as well as NCLT Hyderabad has given the nod for the company's complete acquisition of the remainder of the 58.1% stake in the Gangavaram port. This particular acquisition, remember, values Gangavaram port at close to 6,200 crore, and this particular EV to EBITDA valuation comes in at close to 7.8 times multiple, which compares quite favorably with the listed peers.
Okay, thanks a lot for that. So that's plenty of stocks in focus, but we're not done with the stocks in the news just yet. Vaishta is here to give us a quick roundup of all that she's tracking. Vaishta, good morning.
Good morning, Sonia. The first is Panacea Bio, which has received a long-term supply award, which is worth approximately $127 million, which is equivalent to about 1,000 crores. And this is a contract from UNICEF and Pan American Health Organization. The next stock is Ashiana Housing, wherein the entire 224 units in phase 1 of the Haryana project were booked by the 9th of October. This is a total saleable value of 243 crores and the saleable area of 3.95 lakh square feet. Now, the project mostly consisted of 3 BHKs and 4 BHK units, which were located in the sector 93 of Gurugram. And the last stock is Trident, wherein the production details for the month of September were out. For the home textiles division, bath linen production numbers on a month-on-month basis were up 12%, but for bed linen and for yarn were down 12% and 8% respectively. In the paper and chemicals division also, the numbers were not very good. The paper production was down 4% month-on-month, and the chemical production numbers were also down 5%.
Okay, thanks for that. So here's a quick recap in case you missed out on any of the stocks. Stocks with positive news flow, there's TCS, Infosys, India Cements, Adani Ports, Panacea Biotech and Ashiana Housing. While stocks with negative news flow today, there's IRB Infra, IRB Invit, Reliance Infra as well as Trident. Let's take a quick break, but all eyes will be on the TCS management. Will they talk about demand visibility? Rajesh Gopinathan, the MD and CEO, and N. Ganpati Subramaniam, the COO and Executive Director at Tata Consultancy Services, will be joining in with the Q2 earnings in just moments from now. Stay tuned.